Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief. Hey, good morning. Welcome to the morning brief. Today is Thursday, January 19th. Wow, the week is almost over. Looking at the news today, we had some 8:30 news. We had the Philly Fed manufacturing, which was a little bit better than expected. That's a good thing. Unemployment claims were also better than expected, also a good thing. Building permits were below expectations, bad. Starts were about the same. Not a major deal, except they were revised down. 10:30, we have nothing. Natural gas storage, unless you're a natural gas or a crude oil. Remember, crude oil always shifts by a day on a holiday week. So Monday we were off, so it shifts to 11 a.m. on Thursday versus 10:30 on Wednesday. So that's always kind of weird to see that. But that'll affect crude oil, and really we don't have very much else rest of the day. FOMC member Brainerd speaking at 1:15. Taking a look at some charts. Let's look at the daily chart here. I squash this down a little bit. So we had this big bear flag pattern that we broke out of and created a very, very small, now it looks small flagging pattern, and now we're moving back down. We did bounce basically off the top side of this box, which is not surprising. If we get back into this box, we're just back in the muck. And this would then be a what? A lower high. A lower high. Very negative for the overall scope of things. We have here a higher low. So we had a higher low, which was bullish, right? From this low to this low, it's a higher low, but then from this high to this high, a lower high. But what we are getting is compression. So if we just draw some simple lines, you can see that this is what's happening. We're getting compression as it gets narrower and narrower. And now, the closer we get in here, the higher the probability is we're going to break one way or the other. So we have a triangle situation here where we're getting compression. Is what it is. So let me back up. If we go where could it go today? Well, based on the size of the bar yesterday, we could easily come down, maybe even test this low volume node at 38.68. If it totally reversed, we could. I don't know if we can get all the way back to yesterday's high, but we could certainly get back into this high volume area right here, 39.84. Those are some of the big size numbers, daily numbers I'd be looking at. Taking a look at the inventory. Yesterday, big sell-off in inventory. What do we have? Correlated markets. What does that mean? It means when the market's down, people are selling, they're exiting positions, they're shrinking inventory. That is totally normal and correlated. So all good there. Nothing to write home about. What about intraday numbers? Some intraday numbers off the 7-minute chart here. What do we have for confluence? On the top side, a little bit of confluence around 39.25. Oh, wow. What a ton of resistance. This is going to be a ton of resistance around, the bottom side of this band is 39.43 all the way up to 39.47. That's a huge band of confluence, probably the top side we can look at for today. If we could somehow get through that, there's a little bit more confluence up at 39.60. On the downside, The next spot is 3897. We break the 3900, and you're going to jump down in 3980 or 3880, I should say, 3880 area, 79 area, the next area of support. Stock Traders Almanac for today is 47.6, 47.6. So a slightly negative bias historically. And that's all I've got for you today, guys. See you tomorrow.